Welcome to my YouTube channel. Today we are going to focus on amazing stuff whereby you will get your free marks. As you see here, I have a question paper with me that we are going to go through it. Today we are going to do ordinary share capital as a node and retained income as a node. We all know that these nodes assist us in order for us to prepare what we call balance sheet. So today we are going to focus on ordinary share capital and retained income as nodes, right? Okay, let us go through it. The question paper that I am holding, it says information 8 extract from the accounting records on 28 February. So our financial year starts on the 1st of March 2021 and then ends on the 28th of February 2022. Right. I highlighted these three information as they are going to be helpful for us to prepare ordinary share capital and retained income. Okay, ordinary share capital, as we see from the extract, we are given 7,954,000 as balance at the end, as the amount or the price of shares issued at the end of the year. So we don't have the price of shares issued at the beginning of the year, right? So we are going to go through it. Okay. Information B says share capital and dividends. So this information B, it is going to assist us to complete ordinary share capital as a note, right? Okay. I'm telling you guys, this is not difficult. This is not difficult at all. These are supposed to be the marks that you collect. These are supposed to be the marks that you collect in order for you to get maximum marks that you want, right? So, okay, we are going to go through the information. It says 1 March 2021, 75% of authorized share capital of 1,200,000 shares were in issue. So here we are going to calculate the number of shares that were issued at the beginning of the year. We don't have the amount of the shares that were issued at the beginning of the year, but we have the number of shares that were issued at the beginning of the year. So in order for us to fill in the answer sheet, we are going to use all this information. It is helpful for us. Then the second one is on the 30th of August 2021, 80,000 shares were repurchased from a retired shareholder. So meaning this shareholder um, sold his or her sold his shares to the company, right? So they said he was paid 20%, which is 136,000 above the average share price and will no longer qualify for dividends. This information is very important and will no longer qualify for dividends, right? Okay. On the 31st of August 2021, an interim dividend of 28 cents per share was paid. An interim dividend of 28 cents per share was paid. Then on the 1st of December 2021, an additional 150,000 shares were issued. So here they did not give us the share price for these shares, right? So it means that we are going to do some calculations to find how much is the share price and how much is the total cost for these shares. Okay, on the 28th of February 2022, a final dividend was declared. So they declared final dividends. So this one we're going to use when preparing note 8, which is retained income. Okay, for now, I'm going to stop at information B. I'm not going to go further. So we are going to prepare our ordinary share capital. Okay, let me just, okay, so we are going to calculate 75% of 1,200,000 shares. Okay, let us calculate. Is 1,200,000 multiply by 75%, and that gives us 900,000 shares. Meaning, at the beginning of the year, they issued 900,000 shares. So, meaning this 900,000 shares, it is what we're going to record here on this column, shares issued at the beginning of the year. So, we issued 900,000 shares at the beginning of the year. Okay. Like I told you guys, this is not difficult at all. You just have to read your information and apply what you are told to do, right? So I'm gonna go back to the question paper. And then it says on the 30th August 2021, 80,000 shares were repurchased from a retail shareholder. So the price that were paid, or the amount that were paid, it is not that it is not an average share price that we need. So this one we're going to take it into note number 8, which is retained income. So just take into account that average share price we recorded in note 7, and the price that is above average share price we recorded in note number 8, and the total share price we recorded in cash flow. We will look at it. Okay, but not today. So here they gave us, we are giving 20%, which is the price that is above the average share price. So in order for us to find how much is this share price, okay, the price for one share, okay, price per share, it is how much. So we are going to say total cost divided by the number of shares. So we're going to say 136,000 divided by 80,000. Let me calculate it. Okay. So you're going to say 136,000. Okay, sorry. 136,000. Then we divide it by how much? By 80,000. As 136 is the total cost, then we divide it by 80,000, which is the number of shares. Then this gives us 170 cents, meaning 170 cents, it is the price above the average share price. So when we want average share price, we are going to use this price in order for us to get our average share price. Okay, before I go any further, if you feel like, or when you are watching this video, there's something that you don't get, you are welcome to text me on my WhatsApp account. I will tell you or I will give you my contact numbers before the end of this session, right? So we are going to say 170 cents, 170 cents, 170 cents. Then we are going to multiply it with 100 divided by 20, because we have 20% and then we need 100%, which is their price, which is the average share price, meaning this one, it is above this one, it is above the average share price, this 20%. So if you want your average share price, you are going to say 170 cents multiply, sorry, 170 cents, sorry, okay, multiply by 100 divide by 20, then that gives us 850 cents, meaning our average price, it will be 850 cents. So that will be our average share price. Okay, so now that we have our average share price, we are now going to record it in our, we are now going to record it in our answer sheet. So we found that we have 850 cents, which is the price per share for repurchased shares, for 80,000 shares that were repurchased. So let me calculate how much will be the average cost. Okay, so we are going to say 850 cents multiply by, we are going to multiply it by 80,000. So 80,000, and that gives us 680,000, meaning 680,000, it is the cost for the shares that were issued, but it is average share price. So when we record into our answer sheet, we're going to say, remember that when we subtract into whatever that we're going to subtract, we put it in brackets. So we're going to put 80,000 in brackets, as it is what we're going to subtract. Then we found that the total is close to how much? 680,000. 680,000, right? Then 680,000, 680,000, we are going to put it into brackets, right? We are going to put it into brackets. So now that we have our total cost and our number of shares, so we are going to go further. So this one, it was not given, right? So in order for us to find this one, we said 900,000 shares that were issued at the beginning, subtract 80,000 shares that were issued, or that were repurchased, and then add shares that were issued during the year, then that gives us 970,000, right? So when, so when you don't have your, let me make an example, when you don't have your shares at the beginning, but you have your shares at the end, so you are going to simply say 970,000, then you subtract 150,000. What was added, which is now going to be subtracted. So you add 150,000 shares, then you subtract 150,000 shares, sorry, then you add 80,000 shares, then that will give you 900,000. So please do it with your calculator when you're watching this video. Hold your calculator so that you can ensure whatever that you are calculating is correct. So right now that we have our average share price, which is 8 rand 50 per share. So this price we are going to use to calculate the shares issued at the beginning. Because let me make an example, if you were not given this one or the information regarding this, you are going to use your shares issued at the beginning to find the average share price. So like I said, you're going to say total cost divided by the number of shares. So right now that we have the share price and the number of shares, we are going to say 900,000 multiplied by 8 rand, 8 rand 50 cents. Let me calculate it. So you're going to say 8 rand 50, 8 rand 50 multiplied by 900,000 shares, then that gives us 7,650,000, meaning we issued 900,000 shares with with the total cost of 7,650,000. So it is going to be 7,650,000, right? Sorry, 650,000. So now that we have 900,000 shares and 7,650,000 as a total cost, and then we have total cost for purchase shares, but we don't have the total cost for shares issued during the year, but we have total price of or total cost of the shares that were issued at the end of the year, meaning these are the total cost that or of the shares that we had at the end of the year. So to find or to calculate this one, the total cost of the shares issued during the year, we are simply going to say 7,954,000 plus 680,000 subtract 7,650,000. So what was subtracted is going to be added, and what was added is going to be subtracted. Okay, let me share my calculator so that I can calculate with you. We said we are going to say 7,954,000. Okay, then we are going to add 680,000, and then you are going to subtract 7,650,000. Then that gives us 984,000. So 984,000, it is what we're going to record in our answer sheet. So it's going to be 984,000, right? 984,000, we got it by saying 7,954,000 plus 680,000 minus 7,650,000. So if you want your share price, your price per share, so the formula is going to be total cost divide your number of shares. Take into account because you are going to need it when you are writing your paper 1, right? Examination paper 1. This note, these two notes, they are compulsory, and one of them might appear. So just take into account that when you want your share price per share, you are going to say total cost divide by number of shares, then that will give you your share price if you have your total cost and your average, your number of shares. So let me say we were not given any info about the price of the repurchase shares. So we were going to say 7,650,000 divided by 900,000, and that will be our share price, our price per share for repurchase share. That will be 850. So meaning this one, they are the same, right? Then it simply shows that we are finished preparing. As this our note, so our note, which is note number 7, ordinary share capital. So now that we have finished preparing our note, as I told you, like This is not difficult, guys. This is simple. What you have to do is to read the information and apply the method or the methods that you know on how to calculate all these things. So this must be the marks that you collect, guys. Please, when you are writing your examination, it's either it's going to be June examination, trial examination, or final examination. So when you are writing this paper one, so please guys get all that marks. And one other thing, speed writing, guys, because a real accountant knows how to speed write, right? Okay, so we completed our note, which is note number 7. So right now we are going to focus on this one, retained income. So retained income, I highlighted retained income and shareholders for dividends because that is what we are going to need. Then for retained income, they gave us, we are given 1,196,000, which is the balance at the beginning. Again, we are not giving the balance at the beginning. So meaning if we are not giving the balance at the beginning, we have to do some calculations to find how much it is our balance at the beginning, right? So we are giving shareholders for dividends. Shareholders for dividends, just take it as your final dividends or the shares that we declare at the end of financial year. So meaning last year or the previous year, we declared 162,000 dividends, right? Sorry to say shares, dividends, right? So we declared 162,000 as our final dividends. So this year we declared 213,400 as our final dividends. So we are going to take a look into the information. Okay, let me share my answer sheet and show you what we have and what we don't have. So here we are giving, as you saw in the question paper, we have 1,186,000 as our balance at the end of the year. So we have 213,400 as shareholders for dividends. As I said, shareholders for dividends, just take it as your final dividends, right? So we are supposed to calculate interim dividends. As interim dividends plus final dividends, they will give you ordinary share dividends. Now let us calculate interim dividends. Let us go back into our question paper. So about interim dividends. So they said, okay, let me start here because this information is important. So they said 80,000 shares were repurchased from Avital shares. It was paid 20%, which is 136,000 above the average share price, and will no longer qualify for dividends, meaning this shareholder does not qualify for any dividends, right? For any dividends. And when we calculate or when we pay dividends to our shareholders, we are not going to include his shares because we have repurchased them. He is no longer qualified for dividends. So for an interim dividends of 28 cents per share was paid, we are simply going to calculate it by firstly finding how many shares that we have to pay dividends, the number of shares that are that qualify for dividends. So we are going to simply calculate it by saying, okay, 900,000 shares that were issued at the beginning, and then we subtract that 80,000 that were repurchased, right? Then that gives us 820,000, meaning 820,000 are the shares that qualifies for for final for interim dividends, right, and final dividends, right? No, final dividends we're going to include this one. Let me say are the shares that qualify for interim dividends. So to find out how much did we spend to pay our shareholders their dividends, we are simply going to say 820,000 multiply by 0,20, right? Sorry, 0,20, right? Then that gives us 164,000, meaning 100 and so I made a mistake. I see that is not 164,000. So we are going to say 820,000 multiply by we're going to multiply it by 0,28 not 20, right? 0,28 not 20. So then that gives us 229,600, meaning 229,600 are the number of 229,600. It is the amount that we're going to pay for these shares for interim dividends. Let us going to record it into our answer sheet, right? So interim dividends, we're going to say 229,600. Okay, now that we have interim dividends and final dividends, in order for us to find how much is ordinary share dividends for the year, we are simply going to say 229,600 plus 213,400. So is 200 and is sorry, let me calculate it. Let me share my calculator. So we're going to say is 229,600, right? And then add with 213,000. Sorry, 213,400, right? Yes, this is it. This is what we have paid for the year. And just note it is not what we have paid, but these are the ordinary share dividends, because this one we're not going to pay it in this financial year. We're going to pay it in the next financial year. Then the 213,400 we are going to pay it in the next financial year. So we are going to record it is 443,000. This is it. So note that for 213,400, this is the amount that we're going to pay in the next financial year. Meaning at the beginning of the year, before we pay interim dividends, we're going to pay this one first that we declared, right? Okay, so now we are moving forward. Like I said, when we don't have this one, meaning we have to do some calculations. Then the calculations that we're going to do, we are going to start at the bottom, then go up with it until we find the last answer. So for this one, I didn't tell you. So for this one, we're going to include it into brackets because we are going to subtract it when we do our calculations, but because we are going to start at the bottom, we are just going to edit. Right, now we have to calculate our shares repurchased. We saw an information that was talking about the repurchased shares. So they said they paid this retired shareholder 20%, which is 136,000 above the above share price. So like I said, the above average share price, it is what we're going to record in note 8. We're going to record it in note 8, right? So we're going to say 136,000 and just take it Just record it. Okay, it's 136,000, right? Then, as it is, so sorry. It seems like I'm making so many mistakes, but it's fine as long as we got correct answers. Okay, now that we have net profit after tax, so this one, it might not be given net profit after tax, just to test you that you know the structure or you know the format of note 8. So meaning everything here, all these details, you must know them by heart, because one of them you might not be given. So you will be expected to fill in the missing space here, right? So with this one of net profit after tax, it means that we are going to make some calculations to find how much is our net profit after tax. So I'm going to go to information C. They say income tax for the year after taking into account all adjustments amounted to 438,000, meaning 438,000 is income tax that were charged by SARS. Then SARS, it is the only institution that is responsible with taxes, right? When dealing with tax, SARS, it is the one that is responsible for it, right? So income tax, it is 438,000. After calculating all adjustments, after taking into account all adjustments, meaning after calculating how much is our net profit before income tax, they charged us this amount, which is 30% of the net profit. So when it comes to this one of 30% of net profit, sometimes they might not tell you, especially this one, yes, this one, they did not tell you it is 30% of net profit before tax or 30% of net profit before after tax. But today you are going to know how to deal with it, even if you are doing income statement. So this information will no longer going to be difficult for you, right? So we are going to take our 438,000, then multiply by 70, divide by 30. The reason why I'm saying 438 multiplied by 70 divided by 30 is because net profit before tax, just take into account that net profit before tax is always 100%. The net profit after tax, it will depend on the percentage of income tax. So net profit before tax, it will always be 100%. The net profit after tax, it will depend on the percentage of income tax. So for now, we are going to say 438,000, then we multiply by 70, divide by 30. We multiply by 70 divided by 30 is because we are looking for 70% after subtracting 30% from 100%, and that gives us 1 million, and that gives us 1,022,000. So 1,022,000, it is our net profit after tax. So we are just going to record it is 1,022,000, right? 1,022,000 is our net profit after tax. So now that we have net profit after tax, and we have shares repurchased, and we have ordinary share dividends, and we have balance at the end of the year, we are now going to be able to find how much is the balance at the beginning of the year, the balance on the 1st of March 2021, right? So, like I told you, when you go up, we are going to say what was subtracted, we are going to edit. What was subtracted, we are going to edit. What was added, we are going to subtract it. Meaning we're going to say 1,196,000 plus 443,000 plus 136,000 minus 1,022,000. Let me share my calculator and do it with you guys. So we are going to say 1,196,000. Like I told you guys, this is not difficult at all. Then you're going to add 443,000 because it was subtracted, and then you are now going to add 136,000 because it was subtracted, yes, and then we are now going to subtract our net profit after tax, which is 1,022,000, right? So then that gives us 753,000. So meaning 753,000, it is our balance at the beginning of the financial year. Right? Simple as that. Now that we have finished calculating our note number 7 and note number 8, so everything is just as simple as it is. So right now I will just for the workings, I hope that you got whatever that I was saying, because it is important, guys. Before I conclude or before I end this session, I'm gonna highlight whatever that we talked about in this session about note number 7. I will give you the formulas on how to calculate all these things. So I said, when you want your price per share, you are going to just say your total cost, then you divide your number of shares. Meaning, if we were not given this one, we're just going to say 7,650,000, then divided by 900,000. Simple as that. Then we are done. Then whatever that we're going to get, which is 8 Rand 50 cents, it is going to be our average share price. Note that when preparing note 8 for the repurchase shares, we only calculate with the average share price. And then when preparing note 8, we only let me do it like this. We only record with the price that is above the average share price. So for us to get this one, we said 1 rand 70 cents, then we multiply by how much? By 80,000 shares, right? Then this is how we got all this thing. This is how we got it. This is how we got 110 and 136,000. And note that when we have this one and this one, we're going to add them and then calculate them when we prepare cash flow statements, right? Then for this one, I hope that you all understand, guys. Like I said, I am offering free consultation, but only if you have watched my video and then told me what is that you did not understand, or what is that you did not get, so that I can assist you, especially on this time as we are going to write examinations. But whenever you watch this video, just know that I am offering free consultations, but only if you watch my video and subscribe, guys. This is really helpful for you, because consultations will help you to understand. Because if you text me and then tell me where you did not get or where you did not understand, so that I can make you understand, right? So my contact number is 067 333 2389, but you can find it on information about this channel. On about information, you can find my things there, right? I will submit them. Okay, so thank you, guys. I hope that you pass your examinations, get whatever the percentage that you want to get, and then make your parents proud, guys, because we are doing this to make our parents proud of us. Thank you, guys.